Hello and welcome to Pro Trader Strategies Market Commentary for January the 25th. Yes, it is the Dow 20,000 day. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Like I mentioned, Dow Jones Industrial Average, historic day, 20,000, opened up above 20,000 for the most part, just by a couple of ticks, but has continued to rally unabated to the upside, as are the rest of the equities. But like I mentioned, Dow Jones up right now over 160 some points or 150 points, but on the highs of the day. Then we have crude oil. Crude oil actually had inventory numbers come out higher than expected, 2.8 million barrels versus expected 1.5 million barrel build. But that is also the EIA, which is the Energy Information Administration. It isn't as important as the DOE, which is the Department of Energy. So that one's a little bit more widely looked at. The reason being is because the EIA is a voluntary submission of what they have in inventories, whereas the DOE is actually government mandated to release exactly what those inventories are. So the EIA can be a little bit off for them for that point there, because they don't necessarily have to be as honest as they do with the DOE. Anyway, crude oil futures just down slightly on the day by about 6 cents, but being held up by the broader equity markets. Gold futures down on the day as well, as we're seeing this big rally in the equities, down 13 points on the day. I'm going to talk about this. Yesterday I got out of my GDXJ, and I will talk about that here in a little bit. But with gold futures down again today, probably cover that for a little bit better than what I did yesterday. Bonds down 22 ticks on the day, looking quite possibly at being down at least a point or full point on the day, as these equities kind of rally unabated. This is what I'm talking about with the NASDAQ up 42 points on the day, again having its historical day well above that 5,000 mark now, looking like it's a clear run to the upside. It is getting a little thin up here in the upside, with volumes kind of trailing off a little bit, so that's a little bit worrisome that this rally is fueled by a lack of volume. Anytime you get something like that, it's just a little bit of a worrisome red flag, if you will. Then with the E-mini S&Ps, again up 17 points, they are rallying unabated after yesterday's rally that we talked about yesterday. It never seemed to look back all the way into the afternoon. Late in the day, we did get a bit of a sell-off as the market was taking profits, but I talked about this yesterday. It was just like a relentless rally all day long without any real pullbacks. We used to call these kind of rallies on the floor that it was a face your rip or rip your face off rally, because you're just doing this all day long. If you were short, you just had no opportunity to really get out unless you just jumped, leapfrogged ahead and bought with both hands to get out. That is what we were talking about there. So again, another big rally on the E-mini S&Ps. So I'm actually getting ready to pull the ripcord on a couple of my trades with the SPY and IWM with this rally. It could go on for a couple of days, and I'm not willing to take that on. This is what I was talking about with GDXJ, the gold miners, the junior gold miners. I covered this trade yesterday, had an arresting order for it, and if you remember, I had on the February 44 calls that I was short. I originally sold them for 51 cents, had a resting order in there, bought them back for 26 cents. I'm sure you can get that a little bit better today if you have not covered those as well. Then on to CIT Group. CIT Group is something I actually did for CNBC Trading Nation, and they wanted to see some kind of trade going on, and I looked at this with the financials really pushing higher. I think that this one was really primed to move to the upside. The other thing with this trade here is that the overall financials are going to be doing very well if the Fed continues to raise rates. So that being said, this I was feeling like it was really primed to move to the upside. And if we just take a look at a quick and dirty Fibonacci retracement, look at the Fibonacci levels, you can see that it came down, tested this Fibonacci level, and bounced and repelled away. We also start seeing, if we have the 50-day and the 9-day, those are getting ready to cross those moving averages. They're getting ready to crisscross. That looked like it was going to pop to the upside. So I felt that it was going to trade up here to this volume profile, high volume and time node. So I think that it's going to travel up to there. So in that, I did a poor man's covered call, went out to the September long durations, bought the 45 calls in there, and then in the February, I sold the 60 calls. So looking for that to travel up to at least the 60 level there. 60 calls are only about a 20% probability, so hopefully over time I'm going to be able to roll those calls up and out in time, lower my overall basis on that trade. It is up today as of what I was looking at, so you probably can't get as quite good a level as what I got into, but I ended up paying $12.24 for that. So that one's an open trade right now. On to a couple of other things that I'm looking at is not Monsanto or Altera, I'm sorry. I don't know why that one was up there. I'm actually looking at covering my Adobe. Now, if you remember with this Adobe trade, I put this on for the webinar. This one's really spiked up. We get that big move. That's what we're looking for on this butterfly. So because I've gotten that big move already, I'm looking at covering it. Usually I'm looking at covering it for 25%. The 25% of my max profit. It's not quite there at the 25% of my max profit, but it was pretty close this morning. And in that trade, I have on the February 100 puts with 2 of the 110 puts and short the 1 of the 120 puts. So for every 100 put that I'm short, I'm long 2 of the 110 puts and short 1 of the 120 puts. So if you remember that trade, I ended up collecting a little over $6, and now it's trading a little over $6. Now it's trading just a little over $5. So not quite that 25% of my max profit, but when you have that happen within like 2 or 3 days, you're beating the probability. So pretty close to pulling the ripcord on that trade there. Then on to the SPY trade. This is the one where, if you remember, I created a synthetic short position in there where I'm long the February 124 puts in there, and then I'm short the 124 calls as well. So that creates that synthetic short that I'm talking about. Now, actually, I have it on the February that expire on the 3rd that I'm short in the calls, and then the February monthlies in the puts that I'm long. So pretty close to pulling the ripcord on that one because it's just unabated to the upside, and not going to risk a whole lot more money with that one. The other one that I have on also is with IWM, and if you remember with this particular strategy, I have on a short straddle in there. So very close on those two. Don't have any working orders in there right now. I'm kind of waiting to see if there's any profit taking going on, and I might just pull out of those relatively quickly. So those are the trades that I'm looking at covering today. Haven't done anything in regards to that, but just kind of keeping my eye out to see if this is just a push to the upside and a blowing off the steam, if you will, get everybody happy and go lucky, and then maybe we'll see a pull off. But right now I thought this pull off would happen earlier, so I'm staying diligent in keeping an eye on these. All right, that's all I got for you guys today. Other than if you can't take that, take it easy.